What's going on, everybody? Welcome back to another video. This is the second video for today, so if you guys could drop a like, that would be greatly appreciated. Also, make sure you subscribe if you like daily cryptocurrency videos. We go over Bitcoin, altcoins, and everything going on in the crypto space to try to keep you up to date. This is going to be a pretty important video here, so let's just go ahead and hop right up into it. So Stellar blockchain will soon support USDC stablecoin. So this is pretty cool, guys. USDC, the stablecoin which is co-founded by Circle and Coinbase, first started as an Ethereum-based token. After adding support for the Algorand blockchain, Center, the consortium that manages USDC, is announcing that Stellar will be the third blockchain that supports USDC. The rollout should happen at some point during Q1 of 2021. So it's really not that far away, guys. That is actually very close. So this is extremely bullish news for Stellar. USDC, for those of you that don't know, USDC is a cryptocurrency that follows the value of USD or US dollars. So one USDC is always worth one US dollar. So it kind of makes it, when you're trading crypto, it's easier to go into USDC sometimes than to go into actual US dollars, just because of the way it is right now. Stablecoins present some flexibility when it comes to storing value, as you don't need a bank account. But Ethereum-based stablecoins suffer from the same issues that Ethereum users are currently facing: slow transaction speed and high transaction fees. And as we know, guys, while Ethereum is suffering from slow transaction speed, high transaction fees, we know that Stellar is an immensely faster blockchain, and it's very low fees. I can't remember if Stellar is the fastest blockchain out there, but I know it is. It is so fast. I mean, at some point, it's like, who cares how much faster it gets? These things are already, I mean, they're going with it within less than seconds. At that point, it's like, it's about as fast as you can get, right? So by letting you choose to send USDC on the Stellar blockchain, transactions should be faster and cheaper. Basically, you'll have to choose the channel that you use to send USDC, Ethereum, Stellar, or Algorand. If you're sending from one exchange to another, or from one wallet provider to another, you have to make sure that both support USDC on that specific blockchain. So this is still a work in progress. Some products could choose to focus on one blockchain in particular. Others could let you choose between USDC on top of Ethereum, USDC on top of Algorand, or USDC on top of Stellar. And others might use an abstraction layer so that you can transparently send USDC from an Ethereum wallet to a Stellar wallet. There will be some swapping happening behind the scenes. So that is really good news for Stellar, for all you Stellar holders out there. I'm sure you guys are excited. That's definitely something to be excited about, right? Supporting the USDC stablecoin. I think USDC and Tether and all these stablecoins, they're definitely going to continue to grow in popularity. At least I think. The idea of digital dollars, stable dollars, a stable place to put your wealth. It's kind of safe. I don't think that's something that's going to go away anytime soon, because I definitely think that is it's meeting somebody's need out there, right? And I think a lot of people need that type of stuff, especially a lot of traders. They need something to go into. When they need to pull out, they need to go into something fast. And something like Tether, something like USDC, and any of these other stable coins, that's something that it offers, right? It solves a real problem for people. Now, if we move on, we have Trump security hawks call distributed ledgers critical and US-China tech arms race. Now, I thought this was pretty interesting. We'll get into this. But what's really crazy is this came out October 15th, and the day before, on October 14th, Brad Garlinghouse was on Fox Business, and he was basically talking about pretty much exactly this, that the US is losing to basically a China Cold War, or a tech war, as he was saying. So I'm going to play that for you guys so you can see that. You can see what Brad Garlinghouse said on October 14th, and then we'll go over this that comes out the day after on October 15th. Brad Garlinghouse also gets cut off while speaking, so that's also very weird. I have an idea on it, but anyways, I'm just going to play it for you guys.
Joining me right now is the CEO of Ripple, Brad Garlinghouse. Brad, it's great to have you this morning. Thanks very much for joining us. So you're saying you want a system in the United States where you actually see cryptocurrency and a structure for it. Explain the issue that you're referring to on Twitter, Brad.
Good morning, Maria. Thanks for having me. I think what the world should really understand, and certainly here in the United States, is that we are in a race with China. I think as we look back 3 or 4 years ago, there was a race around 5G networks. And I think if we look back in time today, we're going to find that we're at risk of making the same mistake again. And the mistake this time isn't about telecommunications networks and wireless networks. It's about global financial infrastructure. It's about global payments. Even this morning, I saw a new headline about how China is leaving others in the dust. I think in the race we're in, many countries are just in the process of getting a learner's permit. So for Ripple, we are looking at how do we make sure we can compete on a level playing field. And unfortunately, here in the US, we have some parts of the US government that look at cryptocurrencies one way and others look at it another way. Sometimes it's looked at as a currency or a commodity or maybe a security. And depending on how it's looked at, it's regulated very differently. I think the Chinese Communist Party is being very strategic and is very focused on dominating this technology. I think there's little doubt that today, China is well ahead of where others are around the world. And I think we have to decide as a country, and really the rest of the globe, how we want to respond to that.
And I suspect because we don't have a proper structural framework, regulatory framework in place, the broad public has questions about it. So how do you trust something that there's really not a regulatory framework around?
That really is the problem. And it's kind of, for a company like Ripple, who is certainly, I'm a proud U.S. citizen. I grew up in Kansas and certainly want to remain here in the United States. But even last week, there was a report that came out of the Department of Justice that was talking about cryptocurrencies, and it listed 8 separate U.S. regulatory bodies, each of them with a slightly different view on crypto. Some thought it's a property. The IRS looks at it in one way. And I think really what we're seeing is the U.S. is out of sync with what a lot of other countries, G20 markets, are doing. Countries like the U.K., as you mentioned up top, Singapore, Japan, even the UAE and Switzerland. These are all really good examples where there's a clear regulatory framework that's allowing for a healthy market to develop. I moved to Silicon Valley 20 plus years ago when the internet as we know it today was being born. And part of the success in the United States around the internet was because there was clarity for companies to invest. And there's a very level playing field for investment to flow into the internet as we know it today. As we think about the next version of the internet around global cryptocurrencies, global financial infrastructure, if there's a disincentive to invest here in the United States, it will go elsewhere. And certainly where we've seen some examples of U.S. regulators actually advantaging Chinese technologies, that's the real kind of conundrum we're in, is that if the U.S. government's doing things to advantage a Chinese technology at the disadvantage to a company like Ripple and others like Ripple, then that's a really frustrating place to be. And that's why we have taken the step to look at, should we relocate the company to a country where it is clear?
I think you're making really important points, Brad. I'm glad you're getting this into the conversation. Let me bring in Bob Nardelli here. Bob, go ahead.
Hey, Brad. Again, as a fellow CEO, I can hear the passion in your voice, and I understand your frustration. But at a time when we're trying to do more onshoring, I would hope that, I think you would realize that we're in a very unique situation here with the pandemic. We're trying to get the Supreme Court. We've got an election. I remember vividly being on Maria's show when we were talking about blockchain and cryptocurrency, and it was at the top of the stack of discussion. So I just wonder if there's a pause that you could take to, remedy some of the concerns you had. How do you feel about that? Is there a way for you and your colleagues to unite to try to get more attention on this and get it organized, as Maria points out, please?
Absolutely. And look, the reason why I am out talking about this, as Maria pointed out, we want there to be awareness around this, because I think my experience has been when people understand the issue, then they're like, oh, okay, wait a minute. We didn't mean to create that dynamic where we're advantaging a Chinese technology over U.S. companies. And so there is momentum around this on Capitol Hill. Actually, just recently, there's a new framework introduced. It's called the Digital Commodity Exchange Act that was introduced in Congress in, I believe, the Ag Committee, and there's bipartisan support.
Yep. You don't want to cede all of this innovation to China. Brad, you make a very important point. I'm glad there's at least the beginning of it in Congress. We'll keep talking about this, and please come back soon. Brad Garlinghouse joining us there.
Because I think my experience has been when people understand.
So guys, that was pretty interesting, wasn't it? You realize how they completely cut him off at the end there. They really did not want him talking at all. I mean, not only was it a mic pull where it looked like his mic just got muted or pulled, but they also start playing the music. They cut the camera angle off, and like they just wanted it done. Now I've seen a couple people saying it's because Brad talked about something. Let me bring it back really quick here. When Brad started talking about this,
introduced, it's called the Digital Commodity Exchange Act. That was it. Actually, just recently, there's a new framework introduced. It's called the Digital Commodity Exchange Act. That was
okay. So the Digital Commodity Exchange Act, right? Some people are saying that, you know, he brought that up, then he got cut off. But I think it started a little bit before that. I think when they really wanted to start cutting him off was actually right in the beginning here, right when we hear him say this.
Experience has been when people understand the issue, then they're like, oh, okay, wait a minute. We didn't mean to create that dynamic where we're advantaging a Chinese technology over U.S. companies.
So notice how he said that we created the dynamic that advantages Chinese companies over U.S. companies. But that has not been the narrative during this clip, right? This clip was the narrative was that all of this innovation, China is just absorbing it all while the U.S. is kind of doing nothing. But they don't want the narrative, or for people to acknowledge that we, the U.S., right, the U.S. kind of created this system that is advantaging China, which is what Brad says. So we can listen to that again right here.
My experience has been when people understand the issue, then they're like, oh, okay, wait a minute. We didn't mean to create that dynamic where we're advantaging a Chinese technology over U.S. companies. And so they're
okay, so you guys all heard that, right? He completely switched the narrative here, and at the end, the interviewer here, whatever her name is, she puts in her input, basically bringing the narrative back to what they want, which we can see here. She takes back everything Brad says, basically finishes off Brad's sentence for him and says, thank you, thanks for coming on, but no, this is the way the people need to think about this. So listen to this, right? We just heard what Brad said, and notice how she takes back control of the narrative.
You don't want to cede all of this innovation to China. Brad, you make a very important point. I'm glad there's at least the beginning of it in Congress. We'll keep talking about this, and please come back soon. Brad Garlinghouse joining us there.
See, so that's at least my thoughts. I think right there when Brad said that was right when they were like, yeah, we need to get this guy off the air, because Brad switched the narrative, and then I'm sure once he brought up that other act, maybe that added on to it. But I think right there was the moment where they were like, yeah, this guy is he's talking too much. Yeah, that was October 14th, right? And the day after is when we got this. Trump's security hawks called distributed ledgers critical in U.S.-China tech arms race. So now all of a sudden, now we're acknowledging it. So the Trump administration has included distributed ledger technologies, DLT, the granddaddy tech behind cryptocurrency and blockchain, and its strategy for preserving America's technological supremacy over China and Russia. So they want to use DLT to maintain America's supremacy over China and Russia, and obviously the rest of the world. So now here we are acknowledging DLT. DLT is one of 20 focus areas on the National Securities Council Critical and Emerging Technology Shortlist. The NSC strategy calls for investing in, developing, adopting, and promoting the priority technologies, right? And notice this word, guys, adopting. Also on the shortlist is AI. We've been talking a lot about AI in this channel. Data science, quantum computing, and space technologies, weapons of mass mitigation technologies, and others. Absent from documents, hard numbers, and a concrete roadmap to implementation. Pockets of the U.S. government are already investing in blockchain infrastructure, and the Department of Homeland Security most publicly so. The military is also examining DLT for combat operations, but efforts are still in their early stages. Chinese officials have long been bullish on DLT, a state-sanctioned distributed network for hosting dApps and internet services debuted months ago. It is not quite as clear where Russia stands on state-sponsored DLT use cases. So that's pretty weird, guys, right? We get Brad talking about that, and all of a sudden the very next day we get this, right? And nobody is really connecting the dots, right? The people out there that this is going to affect the most, the people who don't own any cryptocurrencies, silver or gold or anything, they have no clue that this is happening, and they continue to just spend their money unwisely. Now we can also take a look at this, guys. Stocks may very well become tokenized, says the chairman of the SEC, Jay Clayton. So the U.S. Securities and Exchange Commission, SEC, invited innovators in the crypto space, saying that, quote, our door is wide open and that publicly traded stocks may very well become tokenized in the future. The positive stance from the SEC was ushered by Chairman Jay Clayton, who on Friday participated in a virtual conference on innovation and regulation of digital assets. Clayton said that in addition to single stocks, even exchange-traded funds, which are ETFs, could end up in tokenized form if it adds efficiency. And as we know, guys, the tokenization of assets adds probably the most efficiency you can get. There's nothing more efficient than tokenizing an asset so that you can, it's much more liquid because you're just trading it into other tokenized assets after. So they say we're willing to try that. Our door is wide open. If you want to show how to tokenize the ETF product in a way that adds efficiency, we want to meet with you. We want to facilitate that. So in other words, the SEC wants to get these things tokenized, and if there's a company out there can do it, the SEC wants to see what they got. They want to see how they can help them. So also participating in the virtual conference was Brian Brooks, acting comptroller of the currency. As we know, Brian Brooks also has strong ties to Coinbase, who noted that even just the fact that the heads of both the officer of the comptroller of the currency and the SEC were participating in a conference on crypto innovation and regulation, he said it tells you a lot about the maturation of the crypto industry. In September, the OCC said that U.S. banks can provide, quote, services in support of a stablecoin project, and in July they allowed all federally chartered banks in the US to provide crypto asset custody services to their customers. Yeah, we covered that a couple of months ago, guys. So Brooks further explained that his agency has spent time thinking about crypto and what it's really about. He says, I think that anybody who's worked in the field knows that the original concept of Bitcoin and all of these other innovations was not supposed to be to create some made-up investment asset, Brooks said, adding that there are already plenty of things to invest in. We think at the OCC what's going on is something more fundamental, and it may be challenging to the existing bank regulations, which is why we need to clarify them. According to him, networks are fundamentally more resilient and efficient than vertically integrated controlled towers. This is contrary to how banks have traditionally operated, with central control functions that become single points of failure in the system. If a bank went down, really bad things happen, he said, noting that networks don't behave that way. He says, we see this crypto as more of an infrastructure issue than an investment asset issue. In its maturity, the U.S. regulator said, noting that one reason many crypto-related businesses have gotten into trouble with regulators is because we haven't reached maturity yet, right? And that's true, right? A lot of people are getting in trouble because it's not mature. There's not strong regulation. So, in one place you're doing something illegal, and in another place you're doing something that is legal. And it's like, what is the deal? What's legal? What's not legal? What can we do? What can we not do? That's basically what we're sitting here waiting for. And the fact that the SEC, it looks like they really want to sit here and tokenize stocks. And they're saying they may very well become tokenized. Yes, because if they can find someone that they can work with to efficiently tokenize stocks, they're going to do it. And we know that stocks can be tokenized, right? We've done the research. We've seen all of this stuff. We know it could definitely happen. And at this point, with us seeing, Brad on Fox News giving that, again, Trump coming out, the Trump admin coming out calling DLT critical for supremacy over US and China. Again, we even went over Stellar Blockchain supporting USDC, but all of this stuff is all adding up to be some pretty insane stuff. So I just wanted to share this with you guys. That was the second video for today. So again, any likes are appreciated. Liking the video helps grow the digital investor family. And also consider joining. If you like this video, hit subscribe, hit the bell. You'll be notified every time I upload. And I'll see you guys all on tomorrow's video. All right. Hope you guys all have a great day.